Hello and welcome back. The insanity is continuing with Alibaba, and so I actually had to purchase more. I was thinking that I should potentially buy a little bit more of Alibaba because I haven't reached my 5% that I have as a top limit for a single stock in my portfolio. And I actually added a little bit more, and right now I have about $15,000 worth of Alibaba, maybe a little bit less because of the downturn. But what happened today is that pretty much China seems to be going down in terms of Chinese stocks, I mean. And that's because of JD's earnings report. And I'm going to make a separate video about it. But this is the reason, this is the core reason why Alibaba is actually slumping today as well. Nothing has happened to Alibaba itself, but it's mostly about JD that actually causes this sort of like sympathy play, as we call it. A sympathy play, in case you are not aware of what it is, means that the companies that are in a similar or same pretty much industry tend to follow what's been happening in the earnings report of other companies, regardless of whether they are directly affected or not, which they most likely are not. It's all about sentiment, really, and what people think could be happening with industries and companies that are, pretty much doing the same thing. And so, what happened with JD? First off, let's take a look at this article that I was looking at earlier, why Alibaba just hit a 52-week low. You will see that what the article points out here is that the shares have fallen more, even more than what they used to be. And uh, today it was another 8.7% as of the writing of this article. And you will see that Alibaba's rival, JD.com, just reported another quarterly loss and the company's weakest revenue growth in 6 quarters. Which again, it's kind of to be expected. I mean, all sorts of tech companies have been having some weak quarters, and it is to be expected right now amidst this weird environment, economic environment. And it seems that it really is affecting China because of the government issues, really. And so the other thing, the news gets worse. Last week, Chinese Premier Li Keqiang announced that the Chinese government is targeting gross domestic product growth of only 5.5%, and that even may be ambitious, but that's the lowest GDP growth target in 30 years. Now, okay, I mean, that's not directly affecting Alibaba, of course, but, all this news can potentially play a significant role and actually drive the price of the stock down. But the thing is, and that's very, very important, as a value investor, we are taking a look at what's going on with the price here, and we're forgetting about these short-term issues with the company and China and government and policies and all that. Because as I've told you in previous videos, I'm pretty sure that eventually these things will slowly dissipate, and it may take a while, and you may even get a better price. But myself, I had to capitalize on that twice. The first time, the first batch that I bought from Alibaba was at about $118, where I bought 10K, and right now, basically about an hour ago, I bought about 50 more shares, really. So this is like about 15K of a total investment in Alibaba for me right now. And I may actually even think of getting a little bit more, especially if it goes down a little bit more. I may actually get maybe 5 more K. We'll see. I'll let you know. But the thing that I wanted to show you here, which I think it's hilarious, really. Take a look at this. The market cap of Alibaba right now is sitting at 250 billion, right? And the free cash flow that they actually issued um, last year, 2021, was 29 billion. So if we take a calculator here, and I have already done that, as you can see, and do 248, which is the market cap of the company, and divided by 29, which is what they did in the last year, we're getting an 8.5 times free cash flow, which is as much as the whole company is worth, the whole company's market cap, which is absolutely insane. This is an extremely cheap company based on the amount of money that they are making. So basically, we are talking about a company that it would take you about 8.5 years to buy the whole thing, the whole company, just from the free cash flow that the company is making. And so you can understand that for a public company, that is absolutely insane, especially for a public company, for Alibaba's caliber. And so, you have to bear those things in mind and not be too scared of news. At least I'm not, and this is why I bought, and I will keep buying if it goes a little bit below that till I reach like a 5% threshold or something of that sort, and in which case I will stop. But this, to my eyes, is a very, very interesting opportunity here, and I had to make a video to let you know. And many of you may be rattled by this decline. Myself, I don't really care that much, because I understand that whenever there is a sentiment that is that negative, the company stock price can go down and down and down for no reason. But that doesn't really mean anything. It just means that I can buy more. And so I'm glad about that. And I'm gonna wait it out, as I usually do. So that was the video, very, very short one. I just wanted to give you an update on what's been going on with Alibaba here, and just let you know that I bought more of this. And hope you enjoyed the video. If you did, please leave a like and subscribe if you're not a subscriber already. And in the meantime, take a look at this video that I made earlier about Alibaba, and I'm discussing how much the company is worth and how much the stock is worth, and whether it's a good purchase, a good buy. And I'll see you in the next video. Bye bye.